So he's doing a podcast.
Okay.
So he got hooked up with Gary Vaynerchuk. I don't know if you know the guy from Wine Library, with a couple 100,000 followers.
Gary Vaynerchuk, he wasn't he a hockey guy?
He's a Jets guy. I don't know if he's a sports. He's a business guy. He's not a real.
Because I swear there was a hockey player named Vaynerchuk.
Yeah.
In fact, I'm pretty sure it was Gary Vaynerchuk was a hockey player.
Might have been, but I know he's now doing the what you call he's doing the podcast. And what's interesting is Gary was telling him, he's like, in 4 years, personal branding
Mm-hmm.
is going to be more important than the business branding itself. You know what I mean? Like in the sense of like doing the podcast and stuff. And he was.
I would suggest that that's already the case in a lot of ways.
Gonna do.
I'll talk to Jerry and get the other stuff fixed. I'm sorry, you were saying about Vaynerchuk. Please continue.
So so Gary was saying that in 4 years he thinks that personal branding will be more important than the actual branding of the business, right? Like you think Coca-Cola, or we've talked about this a little bit before, LeBron,
Mhm.
right? Like if LeBron James, are you more interested in Nike coming out with a LeBron James commercial, or are you more interested in Nike doing a LeBron James documentary and docu-series on how he's training and what he's doing and all this other stuff? And the reality is that you'd be more interested, if you're a basketball player selling basketballs, you'd be more interested in that.
Right.
And so, okay, why not just do that, right? And you can do it for free now, the technology.
Yeah.
I mean, everyone has a phone,
Mhm.
laptop, podcasts are almost
Yeah.
free.
And you don't even need the laptop to even do the podcast. Technically, we could technically do the podcast directly from just an iPhone.
Yeah,
Or
you
just
just
an
call,
Android
you can
phone.
just call, you can just call.
Yeah, you
so-
just call in and you can run the whole board from a phone.
So we have an agenda today, which I think is the first sort of,
Well, we
first
do.
time we've done that.
Well, we have an agenda every day. We have an outline.
Yeah.
In terms of the things we're gonna discuss. I would just say this, back to that point, because I think it's an interesting point that affects not only, or that will be relevant not only to our industry, but really to any industry that you're in, and to individuals as well. I agree with that assessment. I think it's absolutely correct that the personal identity or the personal brand is going to overtake the importance of the business brand, because people, to some extent know that the company is really made up of the people who make up the company, right? So like the company philosophy, what the company's doing, for the most part in a smaller business is gonna be driven by the ideology of, or the business sense of the people who are in charge of that company, the people who are making those decisions, right?
Yeah,
The people that
yeah,
work there
yeah,
for the
yeah.
small business. So in that respect, absolutely, I agree. I mean, again, when you get to a certain level, like Coca-Cola, it doesn't matter who's gonna be working for Coca-Cola, they're Coca-Cola, that's it, right? But we're not all Coca-Cola, I've been close, so.
well, you give it behind the scenes, right? Like you really think about okay, people like connection. People like dealing with people. It's like why we travel to go see our clients, right? Like you have to
Sure.
travel to go see your clients. Why? Because they want to meet you.
Yeah,
Why do you like somebody who, if you meet a famous celebrity, you automatically like them because you've seen them so much. You've been exposed to them. You feel like you have a relationship with Denzel, right?
Right.
Or because you've seen so many of his movies, right?
right.
And it's kind of the same thing, where I think it's like, through the direct channel communication, you get a feel for the person and their personality over time that becomes an authentic message that you end up liking.
Well, and that's hugely influenced by social media, and by how people, because again, I'm in agreement. I think it's absolutely correct to say that the personal brand is going to eventually outweigh the corporate brand, in that we're moving rapidly to that direction. I agree with that. We see examples of that all the time. perfect example of it, and it's not someone we normally would bring up, although we talk about some odd folks on the show.
All on the table.
Well, like last week, we're talking about Justin Bieber, okay,
Justin.
and then like now
Well,
this
Bieber.
week, I'm gonna throw a Kardashian in here.
Okay.
Okay. You know, there's a great example where people say they're famous for nothing, right? And you can have an argument, you know, one way or the other to that extent, but reality is what they've done very effectively is create a personal brand, each one of them for themselves. And that's what people are interested, that's what they follow. And after that, as a result of the personal brand, again, this is the best example. As a result of the personal brand that they've each created for themselves, yes, their store does better. Yes, they can put their name on, you know, crappy products at Kmart. People will actually buy them, right? They'll sell you anything, phone cards, bags, lipstick, makeup, I don't know, whatever else they make, whatever else they slap their name on a licensing agreement. But the point is that without having created that personal brand, none of the other stuff is gonna work, okay? So it's a great example of, yes, that is actually where it's going, because people are more interested in the personalities and they're more interested in the individual stories than they are, you know, just the large corporation and the corporate story. Because people can identify with individual people, they can't identify with large companies.
No, they can't, well, they can't build a relationship.
Right.
I mean, that's ultimately what they want, right? So you want a relationship, right? You want a relationship with, you know, whoever you have, right? Well, what does that relationship look like? Right? Like, now you have a relationship with where you buy your clothes, you have a relationship with, you know, even if you buy it on Amazon, right?
Mm-hmm.
You still have a relationship. And I think that element of, you know, it's interesting because the author, John Maxwell, always said, like, he started writing books because he couldn't get his message out to people via speaking, verbally, one-on-one. So would you write a book so anyone can read it at any time? Well, it's like, well, how many people can you talk to in the day on the phone?
Makes sense.
20, 30, right, at most, depending on the conversations.
It depends on the conversation.
Exactly.
For me, that number could be anywhere from 1, depending again on how long I'm gonna have the conversation, what we're gonna discuss, to, hundreds. But to the point, via having a publication like that, or having a book published, obviously you're gonna have a much larger audience to reach with that book, because you're gonna be able to reach more folks at one time. They can take the message with them, it's more convenient, etc. But also, to that point, you can also then promote that on social media and have that direct connection with folks. And you can do that much more effectively and on a much wider scale than you would be able to do picking up the phone and doing, marketing.
Yeah, you can't do it now.
Right.
You can't do it now. Well,
You could, but you won't have the same level of success. You may not have any level of success, but you certainly won't have the same level of success that you would taking advantage of the technology you have to touch more people at once.
So there was.
It's always a number.
That's completely a numbers game.
Yeah.
It's completely a numbers game. In the
Everything's
exposure.
everything is a numbers game. Everything.
So it's interesting. So Morgan, my wife, so she's a bodybuilder, right? So she does well. And in the fitness community, so it's like, I'm like a huge Arnold fan, right?
Mhm.
So hey
We
Arnold,
talk about
hey,
Arnold.
if you're listening, Arnold,
We all love Arnold.
If you're listening, Arnold, Fritz and I love you.
Yeah, we do.
And so what's interesting is the social media bodybuilders got it that way.
Mhm.
I mean, these are essentially guys just working out of their house. I mean, working out at the gym. And some of them don't even compete. It's not even like they're just in shape.
Mhm.
And they take that, no business, no employees, no product they're selling, basically just pictures of themselves, and create this whole movement out of it. And it's one of those things to where if that into now the business community, or let's say even the secular community, or even the nonprofit community, or the political community, just changes the game. Because now you have direct control, right? Whereas you don't necessarily have to go to a publicist, you don't necessarily have to go and pay some marketing person to do all this. You can do it directly. You could hire somebody directly for cheaper than it could be to hire some fancy PR agency and have more of an authentic message and carry the message further.
True.
And own all the content.
Now, here's where I throw a wet blanket
Okay.
on top of
Okay.
all of this.
Okay.
And I don't mean to be Captain Bringdown, but this is why the repeal of net neutrality is so vital. This is
So-
why it's such a bad thing, because now what it's effectively done is it's put blocks in place
Yeah.
to where now
Yeah.
the average person is going to have a lot of difficulty reaching the same number of people, reaching the same level of audience, essentially for free, the way that they're able to do now.
So explain to people who don't know, right? So I know a little bit about the net neutrality situation, right? But explain to people who don't understand, what is the net neutrality issue and how does it affect them?
Okay. So as it is now, the internet is open and free, meaning that if you have a website, your ISP cannot slow down any specific website. They can't give priority to another website. Okay? You pay for your internet access, that's it. You've got your internet access. You pay for whatever speed you want, and you get all your content at that same speed.
Okay.
Okay, that's how it works now theoretically, okay? Now, what's happened is, since cord cutters have come in, okay, since that's become a thing where people go, you know what, I don't want to pay for cable because I'm not going to use it. I'm just going to use the internet to stream my movies and stream my TV and watch YouTube and Hulu and whatever else.
Okay.
So people,
So I don't need internet. I mean, I don't
well,
need cable.
I don't need cable TV, right? So
Yeah,
people
so
are
do I.
abandoning cable TV
Yeah.
packages. And the fallout to that, you see the fallout to that in, this is why ESPN is laying off tons of people and losing huge amounts of money. Okay?
Okay.
People will say it, oh, it's for this reason or that reason. No, it's because of cord cutters, because it is more expensive to have a television and internet package, especially when you don't need, people feel like they don't need the TV package. They don't
Yeah.
they're not interested in watching television the way that they were before, and it's not a requirement for them to do that, to get the news and the information that they're after. They could just go to the internet and get it much more quickly, instantly, okay?
Yeah.
So, conversely, what happens, these large ISPs and cable companies, okay, are losing money because they're not able to sell their cable packages. They still have subscriptions that they have to pay for to HBO and to the channels and whatever, right? So they're losing money because they don't have subscribers.
Yeah.
So what do? They have to monetize that internet content somehow. So what they do is they come up with this idea to repeal neutrality and essentially allow cable companies and ISPs to charge you to access specific websites.
Okay, so practicality.
Or to even
Right.
block you from accessing certain websites.
So let's say I'm a cord cutter.
Mhm.
So I've got a Verizon or a Comcast. I get my internet from somewhere.
Mhm.
I got a Verizon, I got a Xfinity,
Right.
I got a Cox connection. I pay $40 a month,
Mhm.
and then I go on Netflix. I buy an Apple TV
Mhm.
or a Chromecast
Right.
for $100,
Right.
and I have HBO Now. I have Netflix, Hulu, and me and my wife are Netflix and chilling. Verizon's upset now because I'm not paying Verizon, a FiOS bill or
That's right.
or a Comcast
Mhm.
cable bill.
That's right.
And they want to slow my internet down.
Well-
Net neutrality prevented that from happening, right?
Well, what they would do is, they wouldn't necessarily want to slow down your internet. What they would do is they would want to, and again, there's a number of things, but essentially what they would do is they would say, oh, Brian, streaming Netflix is not included in your internet
Okay,
package.
okay.
So if you want to
Are they
include
doing
that,
that now?
they can't do that now.
Okay.
But it's an extra $25.
$25.
Oh, you like to go on Bloomberg.com? That's that's a high value site. That's an extra $5 a month if you want to access that website. Okay, and here's the issue is, so the ISPs are now monetizing other people's content.
Got it.
That's one issue, okay? The other issue is, you no longer have equality on the internet, okay? So what happens is, now, think of it this way. When Coester VMS started, okay, thank you. When Coester VMS started, all right, we work. One of the things that really separates us from other AMCs, and that I know that you're very proud of, and I'm very proud of too, is the technology.
Okay.
Cloud-based technology. Okay, our clients can get answers on the go. They can log into our clients and our appraisers. You can log into the portal. You have an individual portal with us if you're a client or you're an appraiser, and you've got all your information there. You can do everything and anything that you need to do online on our site. We require appraisers to use our site, okay, because it helps us maintain accountability during the process, during the appraisal process. Okay. This is why we're able to get an appraisal assigned. We're able to get it scheduled in less than 15 minutes. Other AMCs can't even come close to that. Our technology is part of the reason. So when you started the company, you effectively used, combined with Salesforce, the cloud to do everything online. You had no barrier internet-wise to do that, other than how much does it cost you to access the internet, right?
Yeah.
And then whatever with Salesforce, because they have a certain platform here, whatever. Now, after the repeal of net neutrality, you could theoretically have whatever provider say, oh, that's the type of business you want to do online. Well, that's going to cost you this much extra. You've got to use this package, that's going to cost this much, that's going to cost that much.
Net neutrality, right?
So it effectively is killing new businesses on the internet. I'll give you an example. I just launched my own, I'm changing a little bit of what I do with my artwork.
Yeah.
I'm an artist. So I have my artwork that I do on the side, and I'm now launching a new channel, let's say business channel for my artwork.
Okay.
Which is, I did a memorial painting of my mom for my sister for Christmas.
Okay.
And the way that I did the memorial painting is, after her mom was cremated, I took some of her cremated remains, I mixed them with the paint, and I did a painting.
Really?
Yeah.
And then it's not funny, but
Yeah,
it's just like,
it's
yeah.
okay.
No,
I know
you
it's
can
weird.
actually
It
do
sounds,
that.
it sounds
Okay.
weird, right? So I did that, and that's a memorial painting I did of my
Yeah.
mom. I gave it to my sister, and when I gave it to her, she really, I didn't know how she was going to react to it,
Yeah.
because it is a bit of a bizarre thing, and I've had
Very,
some mixed
I mean, not
feedback.
bizarre.
It's unusual. It's okay.
I would say it's interesting, right? Like
That's
it's,
one of the- that's a polite way to
it's a
say it.
story.
This is definitely a salesperson.
It's interesting. It's interesting.
You see
right?
how
It's
he's
interesting,
like,
right?
Right. So now what I've done is I'm creating my own site, which is, I'm going to do this for other folks. So if you want to memorialize a family member or even a pet,
Yeah.
okay, if they're cremated, I will work with you, I will do a commission and do a painting to memorialize them, and they will literally be part of the painting, because I will mix their remains with the paint, okay?
Now, is that a thing? Or 27, do people do that? Like, do people, because I remember.
I don't know if anyone else has done it,
so-
I've done it.
So there was
Obviously.
a,
I'd like to take
so
credit.
there was
say
a
it's entirely
company
my
down in
idea.
Florida, right? So
Mhm.
there was a company down in Florida, and what they would do is they take your cremations and they would turn it into concrete. Okay, so they'd mix it in with concrete, and they would plant. They have an underwater, underwater reserve,
Mhm.
and they make you into like a statue, right? And then your parents or your kids or whatever
Mhm.
could come and snorkel
Mhm.
and see you, right?
Right,
Like,
and,
it's kind of a cool
and there's
concept.
like, yeah, there's like an artificial reef going
Yeah,
around and
yeah,
stuff.
yeah.
Yeah. There's that one, I've seen that.
Okay, so
There's
yeah,
also-
also coral reef. Yeah.
Yeah, there's also companies that will, mix the ashes in
Oh, mixed
with,
in paint, yeah,
with
right here.
with compost, okay? And then you can plant and grow trees or whatever. There's also a company that will take your cremated remains and compress you into a man-made perfect flawless diamond.
Okay, so yeah, so look at this, right?
So-
So you have, so you can do this.
Yeah, there's
So you
some,
can-
yeah, there's tons of stuff,
You have
right?
scattering, which is kind
Right.
of standard.
Right,
The columbarium, which is kind of standard. At home, planted as a tree,
yep.
launched into space,
Yep.
fireworks,
Mhm.
helium balloon,
Mhm.
coral reef, as an hourglass. Now that's kind of cool.
That is kind of cool. That's
Like when
very
you think about like an
That's
hourglass,
really
like
cool.
an hourglass as a diamond.
Can you send that to me, because I'd like
I will
to.
send this to you. I will send it as an hourglass, mixed in paint, Teddy as a pencil. 240 specifically. You can.
That might be the worst one.
240 specifically filled pencils come in a case with a custom inscription on each pencil.
The pencil one to me,
Like think about that. Like if you went to a funeral and they gave you a pencil that had the inscription of
Or had the ashes of the person in
and
there?
it was made out of the ashes.
I don't know that I would like that, because I don't know if you notice a lot, what I do is when I type, I go like this.
Yeah, for people who chew on their pencils.
So that is a bad way to go. That's just me personally. But
From
anyway,
airplane.
so to my point is that, so I'm launching that website,
Okay.
right? I'm doing all that. Now, again, without net neutrality, they could come back in and say, hey, you know what? We're already hosting a website that does something like this, so we're not gonna host your site. Or you have to pay more than that person is paying, okay? So there's no, essentially it removes any sort of price control, it removes really the incentive to invest or create businesses online, because you're at the mercy of whatever the internet provider that you're using is going to charge you. They can now jack the price up on you for whatever reason.
Now, so like for instance.
That's really problematic.
So let's say counteract that, right? Because if you look at like Facebook, you look at Instagram, you look at YouTube, they already do that, right? So let me just say it, right? Because think about it. You go on Facebook, they don't show you the feeds in order, right? You go on Instagram, they don't show you. They sort of adjust it, right? You can pay as an advertiser for Facebook to display ads directly to somebody. You can pay Instagram for somebody. So when you log in, you're controlling their content, right? Unless you sort of,
Well,
you know, and I guess.
no, you're controlling advertised content.
Is that, do you feel like, well, it's advertising revenue, right? So
But
it's
there's
like,
a wide difference, because it's still free for you to use Facebook. That may no longer be
That's
the
true.
case.
That's true.
Because Comcast or whoever else could come back and go, oh, you wanna access Facebook? $50 a month, okay? And what can you do?
Yeah, that's true.
What can you do?
All right, so getting into the news, and I love this, by the way.
Yeah.
We'll continue this later on.
Well,
We'll keep everyone up to date.
it's an interesting discussion. Again, it's something that's passed. It's not, we're not seeing any effect on it, and no ISP has yet taken steps. There's a lot going on with this. It's certainly not final. I'm just saying that it is something to keep in mind, because this could really have a massive effect on the markets overall, and really on how folks live and do business, because we've really become conditioned to having a free internet over the last 20 years. And so for the internet to become a pay-as-you-go kind of thing, one, it's gonna make it much more expensive, it's gonna limit the number of people who are on it, it's really gonna take the efficacy of the internet and reduce it.
Yeah.
And that's the problem, that's the concern, and, you know, we're not the only people concerned about that. Obviously, there's a lot of folks concerned about that, a lot of folks doing things or taking steps to counteract that or try to mitigate what the challenges are that come as a result of it. But it's,
Absolutely.
yeah, it's interesting because it has a larger effect.
So let's go on to
Yeah,
this, what we were talking about. So Fannie and Freddie, Fannie and Freddie came out with, actually FHFA came out with some changes for the 2018 and what they're gonna do and sort of what changes. So first thing is credit scoring models. So they're thinking about offering alternative credit. So, you know, the old FICO, Fair Isaac credit score, the Equifax, Experian, TransUnion. So they're thinking about offering an alternative credit, right? And sort of looking at it in the concept of, well, if you paid your rent on time for 5 years, and it's $2,000 a month, why does it matter what your credit score is?
Right.
I'm
agreeing with that.
payments, like why does it matter? And I think there's so many people who, like for instance, my father, so when he tried to get a car, so he had a 0 credit score, he hasn't paid his credit, he has no credit cards, right?
Yeah, he just doesn't
have anything to do, right? Owns his house outright.
And here's the irony, and yet he's penalized.
And he's penalized.
It's unbelievable.
And then also
ridiculous.
all the people who, I mean, you get a collection notice in the mail for a medical bill that you didn't even know about, and then all of a sudden your credit score gets hit. You're getting charged more, right? Because you went from a 750 credit score to a 670 or a 600 or a 580.
Yeah, there's a financial penalty, ongoing, it's an ongoing financial penalty.
But it has nothing to do with, let's say, necessarily you.
No.
Right? Like you're not necessarily, like you paid all your bills on time, you're a good, worthy credit person. For whatever reason, you're not friends with Experian and FICO, and because the thing is, it's manipulatable, right? There's all these companies.
Oh, it's easy to manipulate.
Like
Information is not secure, okay? Look what happened with Equifax. How can you have confidence if you're making a lending decision based on the information Equifax is providing you when they can't even protect their information? They have no integrity with what they're keeping, with their record.
Well, it's sort of like
It's been compromised.
Well, it's been compromised, but like, okay, when you can, from my perspective, when you can advertise, hey, you do these 5 things, and it'll increase your credit worthiness by 50 points or 75 points.
Mhm.
right? Like, I remember one time when I was first trying to get a loan, I went out and got a secured credit card.
Mhm.
Okay, and I charged, $3,000 or $300 on stuff, paid it off over time, got a little bit of interest charged, but that gave me enough credit to go buy a house.
Mhm.
Well, the thing is, there's plenty of people who have bad credit that then, you can go pay somebody $500-600, and then in a couple of weeks, couple of months, have good credit.
Yeah.
Well, that's not, if you can just do that, that's
Oh,
not an accurate,
yeah.
it's like, show me you
And-
paid your rent on time for a couple of years.
I agree,
you know?
and even to the point, you even went a long way on that by actually obtaining credit
Yeah.
and then using it, okay? You don't even need to do that. You can get a copy of your bureau and then look at it, and any sort of negative information on there, you right to dispute that.
Yeah, no, say it up.
And they have to take that off until they receive evidence that it's actually a legitimate entry. And the problem with that is, in most cases on your credit report, by the time it becomes a negative entry, okay, it's either a collection or a late that's been resold, the servicing's been resold on it.
10 cents on the dollar.
Right,
Yeah,
okay,
yeah,
to a debt load. And then what happens,
Yeah.
they don't have the access, they don't have
they
access
don't
to
have a
show
copy
the
of the
original
contract.
document. Right, they don't have the original document, the original contract to show that you actually owe that money. So what happens? They're compelled to remove that information.
I want to see what they come out with.
Okay.
I really want to see. So another thing they changed was appraisal market. So the GSEs are planning on changing the appraisal form, which is something we sort of already knew.
Yeah.
And from what I've sort of heard through my little birdies, is it's going to be more of an if-then scenario.
Mhm.
So where the form will be more interactive and say, okay, if it's rural, give us this information. If it's suburban, give us this information. If it's urban, give us this information. And then also the appraisal fee thing. The appraisal fee thing, which to me, what do you think? What do you think about? Well, what do you think about changing the form? And then what do you think about the appraisal free mortgages?
Well, let me address the form first, because I'll say that, first of all, appraisal-free mortgages, no, you should not be lending any money on any collateral without an evaluation of what the collateral's worth. That's what I think.
And I
about
think,
that.
what's interesting is,
And-
I think, like, to your point, right? I don't think they see what you see, or what we see sometimes on our side.
No, I don't think they.
Where you sort of like bake it into the risk model.
Right.
But like, the baking into the risk model, I think, is what everyone thinks, like, okay, well, if there's a 1% default rate, or 2% default rate, instead of
Mhm.
charging 3 points, you charge 5, which all sets 2 points and blah, blah, blah.
Right.
But then I think to myself, like, yeah, that's assuming that people are gonna catch wind of what you're doing. Right? Like, it's assuming it's a normalized market, so 2% default rate, 2% fraud rate, based on somebody going and inspecting the house.
Well,
And then, some guy, you're testing the appraiser's integrity, you're testing a third-party company's integrity, you're testing the mortgage company's integrity, in the sense of making sure they're not changing or modifying the appraisal and doing some of those other things.
right.
Well, when you remove that, nobody inspects it. Well, now what?
Right, well, see,
You
that's
know?
just it, right. Again, it's irresponsible to say, well, under this model, we have this result, so let's just change the model and expect the same result. That's not gonna happen. One of the reasons you have a low default rate is because you have very specific rules and requirements for the collateral evaluation, okay, and the lending guidelines, and those things have to be followed. And when you follow those, what happens? Conversely, you end up with a lower default rate. When you don't follow those rules, or you loosen those regulations too much, not to say you don't, that you have to have all these regulations, but you have to have some amount, you have to have a reasonable amount, but you loosen those up, okay, and you create more opportunities for default in the market. You create more opportunities for bad loans and for people taking loans they shouldn't be taking.
Well, and also
So-
like for instance, so automation.
Mhm.
So something like verifying bank assets.
Mhm.
Okay, so usually when they start automating those, right, where you give me your, your Bank of America password, or your Bank of America login credentials, I just API call it, Bing, pull your statements, I verify how much money's deposited for the last 2 years. There's no way to alter that, right?
Right, that is a,
What they're finding out, before you say that,
Mhm.
is people are pumping their money.
yeah.
Right, you get money from you, and give me $2,000 a month for the last 6 months.
Mhm.
I tell you I got a raise, now I qualify for the mortgage.
Right.
So on the appraisal side, could you imagine what would happen?
Oh, what's funny is, it's almost like they're just trying to create more opportunities for people to cheat their market,
Correct.
okay?
Correct.
And, you know, that's one, as an example, that would have been undone when as an underwriter, we would look at that and say, well, is this money seasoned? I wanna see it. I wanna see the deposit that put this money in this account, right? Or I wanna see the corroborating documentation that explains where this additional income is coming from, so that you know that it's not just your buddy's throwing some money your way, which you're holding on to for him, and then you're gonna kick it back to him at the end after you secure your loan or what have you, which, yes, that happened. It happened far too often. It's one of the reasons we had a bubble that burst. Again, it's a fine line to walk when you're talking about what type of regulations are needed. You can't exist in an environment that's overly regulated, because yes, it does kill business and it kills originations. Okay, so you can't over-regulate it. You can't do that, because if you do that, you restrict the market too much.
Yeah.
Now, conversely, if you have no regulations, then you just have no rules. You've got no enforcement. You've got nothing there to protect the integrity of the market. So that doesn't work either. So you've got to find a balance in between the two to have some level of regulation without over-regulating.
So what do you think? What do you think? So appraisal form. So
Well,
obviously, if they're coming out with a new form, they plan on keeping appraisals.
Right,
And
which
so-
is good, and
so-
I think changing the form is a great idea, because the 1004 has been around in its current form for a long time.
So it's about, I want to say 10 years now, maybe a little longer.
A little bit longer.
Something like that,
It's
right
been
around
long-
10 years? Yeah.
Yeah, a little bit longer than 10 years, but working with the format that they're proposing as an if-then. Effectively, what that will do is actually give you a better collateral evaluation, because we see the changes, some of the challenges that we have from a quality standpoint,
Yeah,
from a
yeah.
QC standpoint, okay? You've got essentially one set of guidelines that are supposed to go across the whole board, right?
Correct.
So unfortunately, what happens with that is, look, those guidelines work really, really, really well when you're looking at a suburban property in a well-populated neighborhood that has enough comparables and enough data, you know, market data and neighborhood information to create a accurate and clean report. Let's call it a clean
Yeah,
report,
okay.
okay? You don't have to have a ton of adjustments. You don't have to go find comps that are aged or any of this and all that. That's great. And the current form and the current format works really well for those suburban properties. However, the minute you get outside of that, and it could be any number of ways, but let's just use, if you're going to a rural area.
Yeah.
Now you've got limited comps, now you got a weird property type, now you've got some unusual stuff happening with that particular property. It's not gonna fit the mold nearly as well
Okay.
as that suburban
Yeah,
property.
yeah.
So what happens? Now you get an appraisal report that's got a ton of adjustments. It's got a whole bunch of commentary. Okay? And it just, what happens with that is when the underwriter starts looking at it and seeing all this crazy stuff on it, they start getting nervous, they start over scrutinizing the appraisal, and they start going, no, wait a minute, I don't like this, I don't like that, and now the next thing you know, you're back and forth with the appraiser to really try and create a narrative that will be specific for that underwriter.
Yeah,
Okay.
and that just doesn't work, right?
Well, so it doesn't work
yeah,
because it
doesn't work. That doesn't work.
delays
Yeah,
the
that doesn't
report.
work. That doesn't work.
It delays the report, it delays,
Yeah.
more importantly, because it typically in that scenario, because it's requiring a ton of revisions and back and forth and whatnot. Not only does it delay the report, more importantly, it delays the closing. It delays closing that file out, closing that loan, because you've got an issue with the collateral, which is the biggest
Yeah,
part of it,
yeah,
right?
Yeah.
And it's not that there's an issue with the collateral, it's just that the way that it's being reported doesn't fit the template.
Yeah, and you know
Okay.
what's interesting is like, you know, so when you take your use pack class
Mhm.
as an appraiser, they always emphasize the fact, you know, the form doesn't do the appraisal, the appraiser does.
That's right.
Right, there is no use pack compliant form, there's only use pack compliant appraisers.
Mhm.
But the reality is, practically speaking, that if the form doesn't have it, they're probably not going to do it. Or if the form
Oh,
doesn't
I
ask,
agree.
and it's like as an
Yes.
AMC, you're sending over these 15-page letter engagements.
Yep.
And the scope of works.
Yeah.
Because why? Because there's just so many variables.
That's
Where it's
right.
like, there's really no reason the user should be able to build all those questions. You know, if it's rural and the comps are over 5 acres, add a 6 or 7 comp.
Right.
I mean, that can very easily be built into the form,
Mhm.
to where, oh, if it's, you know, above 5,000 square feet, you know, we need at least 3 houses that are like this, right? One bigger, one lower, or whatever it is, and prevent a lot of the issues, because ultimately they know what we're looking for, or what they're looking for, right?
Sure.
And a lot of the scope creep and the scope of works, I think, really comes back to not being able to ask the right questions as the appraisal's getting written.
Mhm.
You know, during the kind of write, because it's interesting, as an appraiser, you're kind of writing, like as an artist, right, you kind of have, it's like it's almost like an artist, right, where you're sort of going out and doing this inspection, researching, and then coming with this conclusion, at the same time, you're kind of painting the picture.
Oh, yeah,
Like, you know,
that's exactly
you're
what
kind
you're
of
doing.
adjusting as you go.
You are painting a picture of what this collateral is for the people who are gonna make the decision,
Yeah.
I'm gonna lend the money on
Yep.
this. Absolutely.
All right,
I just real quick to wrap that up, I just want, yeah. Again, I think it's important that the form is updated. I think what ends up happening there is you get a more accurate assessment of each property. Because the suburban ones that fit the mold now, they're still gonna fit the mold, it's not gonna be an issue, okay? And they're gonna be even easier for appraisers to do those reports, right?
Yeah.
Than they currently are, because like you said, if this, then this, if this, then this, if this, and this, check, 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 done. Now, it's also gonna make it easier to do those rural properties, okay? And you're gonna get a more accurate assessment of what those markets look like, okay?
Yep.
Which is important because remember, this information is still being archived and placed in CU.
Yeah,
Okay.
yeah, and that's gonna be.
And that's
I mean,
really,
That's a whole, yeah, that's a whole. nother-
right? So if you have, think about it. What do we see on rural properties? We're much more likely on a rural property or an unusual property or property type to see a whole bunch of CU revision requests when we run that file through.
Yep,
Right?
absolutely.
Now, if you have a more accurate form, a revised form that's more accurate and specific to that property type or property location type, you'll see fewer of those CU requests coming in. What does that do? That means appraisers can spend their time actually appraising and earning a paycheck as opposed to revising reports that they've already finished,
Yeah.
and that they've already been compensated on.
So moving on,
So it'll
and
be good for their-
I agree 100%, I agree
Yeah.
100%. So new home sales.
Mhm.
So Case-Shiller came out with a report, new home sales are the highest level in a decade,
Yeah.
meaning kind of 2007 marks. And they also came out with a report saying that, you know, renting could be more attractive. So let's just sort of get right into this. Home prices increased 6.2% annually in October, up from the September annual increase of 6.1%, according to the latest S&P CoreLogic Case-Shiller Index report. The 10-city composite increased 6% annually, up from 5.7 the month before, and a 20-city composite increased 6.4% year over year. And basically what they're saying is prices are going up, right? So the median income last year, median home price was $318,000, now it's $377,000. So prices are going up, and now they're looking at saying, you know, new home sales are going up. And they're saying, okay, is it going to be more attractive? Now, here's the thing, is that they've been saying millennials aren't gonna be buying for quite some time.
Mhm.
Well, obviously, there's somebody buying the houses, right? Like, there's obviously somebody. And also, there's a lot of new construction applications, right? So new home sales are up, prices are up. And then now people are saying, okay, well, are we heading for another bubble,
Yeah.
right? And then also, at the same time, you see construction applications going through the roof, right? So construction applications are up 15–20%, as well overall nationally. And I mean, what do you think? So, and I know you mentioned some stuff in California, but even they're saying California home sales are dragged down by affordable housing crisis. It's only getting worse. This is by Jacob Gaffney and Housing Wire, saying that housing sales dipped this year because homes were too expensive.
Mhm.
They can't afford them.
Right, the problem is you're not seeing, what you're seeing is an acceleration in the housing market based on the demand, and that's great. The problem is you don't have average income increasing to match. So that's the problem. I mean, and stagnant income has been a problem in this country for decades. It's not a new thing. It's just that people have had access to easier credit and more credit and lower price credit, which has allowed them to offset the lack of advance in their income.
The rates are going up a little bit
Right,
now.
so, right, exactly. So now the rates are going up a little bit, the money becomes a little bit more expensive.
Yeah.
It becomes much more hard, becomes much more difficult for people to qualify, even at those fraction. I mean, these rates are still unbelievably low. They're ridiculously low. Money's basically still free, okay? But even the slightest increase to that will put a lot of people out of the market because they can't afford to get back into it. And actually, the rates being as low as they are, let's be real, that's one of the reasons people have been able to afford to get in, and that's one of the reasons we've seen an acceleration in property values and pricing.
Yeah, and so it's like you say that, right? And then you think, okay, so they're building, okay, so that's definitely happening. So they are building.
Mhm. The problem is they're not building affordable housing units.
Okay.
That's an issue. But again, you've got to put
So they're
yourself.
trying to do that. They're trying to do that. HUD's trying to do that.
Okay,
It's a
but
little
think
bit
about this,
deployed.
you've got to put yourself in the position of the builder. If I'm a builder and I have a limited amount of space to build a limited amount of units, I want to make as much money as I can make.
Yeah.
I want to build these houses as big as I can build them. I want to put as many amenities, upsell as many amenities in here as I can, right?
Yeah.
Because I'm in business to make money, that's my job.
And as
right?
long as I can, as long as I can get it financed.
Right.
I'm good to go.
Right.
And as long as that appraisal comes in.
Well, as long as I can get it,
Right,
right, think about this,
that's the key.
as a builder, if I can get that financing,
Yeah.
well, yes, the money is so inexpensive to obtain, you can afford to do that, right? So you can afford to build the bigger, okay, homes and the more expensive, right? But people can't necessarily afford to buy them, and unfortunately what's happening is the pool of available buyers is shrinking because they're buying homes. Every time someone buys a home, the pool of available buyers shrinks a bit, unless it's a second or third home, in which case those folks are gonna be buying anyway, so it doesn't matter. Okay, but in general, every time someone buys, it shrinks the pool of available buyers. So you have to continue to add people to the pool of available buyers to maintain that, okay?
Well, millennials with debt.
Right,
It's
well,
debt,
well,
right.
so what you have to have is you have to have at least some affordable units for them to get into. Because the other side of it is, down the line, in 5 years, 10 years, right? The person that buys the affordable housing unit or the lower priced housing unit now, they're not gonna live in it for 30 years. The whole idea here is they should be in that unit for 5 to 10 years and then be looking to upgrade to a larger home. Okay, which will create some velocity of money and velocity of capital in the housing market and will still allow for a resale market for affordable homes. Because as it is right now, when they're talking about affordable home initiatives, they're talking about just new construction.
Well, they're talking about, new construction is important because that's really the pull on the economy, right?
Yeah,
When you
it
think
fuels-
about,
absolutely,
like,
fuels-
when you
fuels
think
growth.
about
Of course.
a second house transfer, right?
Mhm.
You're talking about a realtor getting a commission and
Right.
maybe some furniture. When you're talking about new construction,
You've got a whole.
you've
right,
got a
yeah.
whole, like, when you're talking about a subdivision.
Oh, sure.
You know, you got parks and planning, you got city getting involved, you got water, and that really drives the economy.
Oh, sure,
And all
it
these-
employs thousands of people, it takes thousands of people to get involved to build a project. like
Yeah,
that.
and what's interesting is the builders and, you know, have always kind of went on to the building the bigger and better, right?
Mhm.
You remember 2007, they had all those mini McMansions.
Sure,
and the
sure.
whole, you know, the McMansion term was coined, right?
Yep.
Now,
Oh, look at my parents' neighborhood, that's all it is now.
Yeah.
There's 2 original homes in the entire neighborhood, my parents had one.
yeah, they fix the flip, yeah. And then now you think to yourself, okay, well, we're not building any more McMansions. The market shifted a little bit, like you got the tiny house movement going on.
Mhm.
Let me ask you this, all right, and we're gonna talk about tiny houses in 1 second, so,
Okay.
so let's note that. So now builders are questioning, and I think this is the first time it's happening, a little bit. Do we build smaller and more affordable? Right? Because
Yeah.
interest rates are going higher.
Yep.
Do we build a little more affordable housing?
Mhm.
And I don't think anybody wants to do it.
Well, the builders
You know?
don't wanna do it because again, it's not gonna maximize,
Maximize
it's not
use.
gonna, they're not gonna make the most money that way. So I understand completely why they don't have here's the issue, they don't have an incentive right now
Yeah.
to build affordable or smaller units, okay? They need to be provided with one, give them an incentive to build affordable housing units, okay, and lower priced units, and watch what happens with that market, because once they're given the incentive to do that, and they do that, and it's profitable, they'll wanna do it again.
That's true, that's true, that's true.
Okay.
Well, and you know,
But,
back in
but
the
there's
day,
a barrier to
so-
entry, because there's a barrier to entry, and the barrier to entry is they're not expected to be profitable. You've got to provide them incentives to make it profitable for them to build those units.
And back in the day, so if you look at a lot of how New York was built, and Brooklyn was built,
Mhm.
and a lot of the cities were built, there was housing initiatives done
Mhm.
by HUD,
Yeah.
done by some of the insurance companies to build affordable housing.
Mhm.
And I think now, you may be coming back to that a little bit. I think you're saying, and it already started, so the reason I say the tiny house movement is it sort of already started, right? Like, I am so close to just building one of those tiny houses on my own, right? And I'm gonna put it in my backyard.
You're the
right?
size of a tiny house. What are you gonna do with a tiny house?
I just like it.
You are a
I like
tiny
it. I like
house.
it. I like the idea. But the
Well,
idea-
that's another thing, we'll talk about that in a minute. That's another big thing
So you
right
think about,
now,
right, because that
is
tells you.
is the shack, the man cave shack in the backyard. Have you seen that?
Well, I've seen some of them, but yeah, but that's the idea.
You
It's
build a
like,
garden shed and you go in there and it turns out it looks like a sports bar inside of it. That's a big deal right now. That's cool.
well, you think about it, right?
That's what you should be doing.
Well, that's becoming popular.
You should build a sports bar in your backyard, in a shed in your backyard, and then
Podcast.
invite me over.
We
I
can
mean, come on.
podcast, we could podcast, we could do a live stream.
That'd be awesome.
The housing.
We could do a sports podcast from the sports bar in your backyard. That would be really cool.
We're gonna do that. You know what, next year this time, we'll do that. So, many houses, right? So that's a pretty good indication. When you see that movement, nomads, traveling, right? Moving around, doing all those type of things, that's a pretty good indication of, okay, well, now I want a kind of different way of living, right? I have the internet, right? The term digital nomad, right? I have the internet, I got Wi-Fi, I park my trailer next to a Starbucks and dip off of it.
Right.
So why do I need this house? Why do I need to rent, right? And I think now when you think about like the affordable housing issue in California, it questions to yourself to say, okay, what's preventing a whole bunch of people from just saying, screw this, I'm buying a $10,000, trailer mini house and just doing that, because you really don't, what's the difference between that and some tiny apartment in San Francisco that's 600 square feet or 500 square feet?
You can drive the tiny trailer home away from the forest fires that will destroy your house.
That's true. There you go.
Well, no, but I get what you're saying, and I think that is, there's going to be some appeal for that. I think that will be probably the next, let's say, call it de-evolution of the tiny housing thing. And here's the issue with tiny housing, okay? And I get that the tiny house thing is real hot right now, and that's a market that people, people are weighing into and whatever. But the issue with it is the same as the issue that happened about 10 years ago where everybody wanted a vintage Airstream trim,
Okay.
okay? You still have maintenance and upkeep costs on a tiny house just as much as you would have in a regular size home, okay? People don't really
Now you gotta
understand
go
that
find
the
all the
maintenance of
tiny
it.
little parts.
Right, exactly, except, right. you can't- Right. Well, the other part of it is, look, whatever people want to say, it's not as secure and safe to be in a tiny little house like that, because when we're talking about these tiny houses, we're talking about like 300 square foot shacks that people live in.
Parking in a parking lot.
Yeah, right, or they put it on their neighbor's yard or something,
Yeah,
or whatever,
whatever, yeah,
okay?
yeah.
So there's a bunch of problems with it. One, it's just not a safe way to live. It's not as safe to live in that type of residence. That's reality, okay? When I say not as safe, I don't mean just from like physical crime, I'm talking about from weather, okay, inclement weather. Look, there's 5 feet of snow right now in certain parts of New York. You wanna be in a tiny house with 5 feet of snow? I don't think so.
Yeah, no, the fire, yeah. that's
Right?
So what's
You're
going on?
freeze to death in
Yeah,
your
so
own house.
let's-
It's crazy.
Let's talk about that. So-
Also, keep in mind one more thing with the tiny house thing. Another problem with the tiny house thing is it's preventing the municipalities from collecting the type of tax revenue they need to collect. Because they're not getting the type of property tax revenue that they would get on a standard size residence. And that's a problem. That's a problem. Because the city's gonna have to still maintain the roads to get to your tiny house, the fire department to protect your tiny house when it catches on fire and burns down in 3 minutes, the police department, which will no doubt have to come to your tiny house because someone stole it.
Yeah.
Okay? All of those essential services still have to be paid for. They still cost the same. In fact, those prices are going up. You don't have the tax revenue collected on the tiny home to cover that type of cost. And that's
Now,
another issue with
is a
tiny houses.
home basically the same as a trailer, just slightly more Birkenstocky from Denver. You know what I mean? Like when you really think about it,
I think it depends
like
on-
basically somebody's like, no, I don't have a trailer, like Tarjay, like I don't have a trailer,
right.
I have a tiny house.
Yeah, I think that,
Because
honestly, look.
Basically the same
It's
thing.
basically the same thing. I think you make a good point that it's more, with a tiny house, it's more of a, it's presented in a way where it's, it's not, you're not living in a trailer and, God's gonna
No,
wipe you off
no.
the earth with a hurricane kind of thing. Although, tiny house, you're gonna blow
You're
away.
basically living in a trailer.
But you're basically living in a small trailer, a
Yeah.
tiny little tiny trailer, not even a regular size one, okay? And again, somehow this is supposed to be beneficial. I'm not entirely opposed to it. I think that there are just a lot of issues and challenges that come along with it, and it's not necessarily good for the housing market. So I think that, to kind of put a bow on it, yeah, I think that affordable housing is certainly a bit of a crisis in the country that we, especially here, especially San Francisco, certain areas. Yes, there needs to be more affordable housing, and builders will need to build affordable housing units. However, the solution to this is not a bunch of tiny houses, okay? Because at the end of the day, most people, not all, but most people are not gonna be satisfied long-term in a tiny house.
Oh, no, this is all,
Okay.
yeah, it's funny, because you're 100% right.
It's trendy. It's a trendy thing.
It's trendy,
It's
and
trendy.
it's like, people were talking about, the millennials. The millennials are never gonna buy.
Right.
The millennials, and it's like one of those
They
things.
will if they wanna build any wealth.
Definitely, like Warren Buffett said, nothing changes. Hormones kick in and
Right.
everyone follows the same path, right?
Right.
Now, they may do it in a little slight or delay.
Mhm.
There may be some errors where, it's delayed 10 years or earlier 5 years or whatever, but everything's gonna be the same. You're right, with the tiny house thing, it's like the spinners on the trucks. Remember the spinners back in the
Mhm.
90s?
Yeah, of course.
2000s,
Yeah.
90s?
Yeah.
And it's like everyone loved it, and then
Mhm.
all of a sudden you were the douche with the spinners.
Yep.
And you know what I mean?
Yep. You paid $3,000 to get a set of hammer wheels on your $200 hoopty.
Yeah,
And a week later, they're out of style and you're going, you can't even unload these things, you're screwed.
Exactly.
Yeah.
So exactly, I think it's gonna be that. But moving on, so snowfall records shattered over 60 inches since Christmas Eve. Massive record smashing events triggered a snow emergency, and now they're actually expecting snow coming this weekend. So how is that changing? So with New York at 5 feet?
Over 5 feet in certain areas, yeah. Western New York. And it's lake effect snow too, which is the worst kind, because that's the thick, wet,
Yeah.
sticky stuff that's coming off Lake Erie from up there. in
And then
Canada.
Pennsylvania got 50 inches of snow in under 48 hours.
Mhm.
So what is that doing to the market? Is that delaying things?
Oh, God, yeah.
Yeah.
Yeah, you can't do you can't go out and do an inspection when there's 50 inches of snow on the ground. That's over 4 feet of snow. That's insane. That's no way.
Yeah, no, you can't.
I realize you're so tall that 4 feet to you is like to your knee.
Yeah.
But for most people,
yeah,
it's like
for sure.
it's like up here. It's it's a lot higher up.
So they're expecting snow too on Chris. So what's interesting is the weather, right? Like when you really think about delays in real estate, how much the weather makes a difference.
For sure.
You know what I mean? Like how much the weather makes a difference, how much,
You can't crawl around. You can't be getting.
like like hurricane issue like Puerto Rico, they're still dealing with that, right? I mean, they're literally still dealing with.
Yeah, and they will be,
Yeah.
they will be for a long time, and I have a very bold prediction about Puerto Rico.
What do you think? What do you think?
I think that, now this is gonna be years down the line, this isn't gonna be something that happens very soon, but mark my words, I'm saying it now, on December 27th in 2017.
Noted,
that-
noted,
Okay.
noted.
That-
Stamp approval.
That this hurricane now that's hit Puerto Rico, what's going on with the situation in Puerto Rico, combined with other factors, mainly their huge staggering amount of public debt that they currently have, okay? I predict this will lead to statehood for both Puerto Rico and Washington DC. You will have two, because the only way that you can effectively rescue what's going on in Puerto Rico or correct what's going on in Puerto Rico is with a massive infusion of capital. And the only way that they're gonna have a massive infusion of capital is if there's some guarantee of it. Well, you can't, I mean, look what happened to Puerto Rico. That's how they got in trouble with all the debt to begin with. That no one's gonna buy bonds backed by Puerto Rico.
Nobody.
No offense.
Nobody's doing it. It's interesting, is
But-
I took a Uber driver.
But US bonds, they will back.
I took an Uber ride with a guy who used to run the Puerto Rican sort of bond retirement.
Mhm.
You know, they would issue bonds, they would sell them and stuff like that.
Mhm.
And he said nobody, they wouldn't make the cuts on the welfare. They would not make the cuts on the welfare to be able to pay everybody. And what ended up happening is, he goes, you got to the point the pensions that they needed were just outweighing so much tax revenue because they kicked all the companies out. So there used to be all these, what kind of companies?
Multinationals, yeah.
Well, all these what kind of companies did he say? I wanna say jewelry companies. Were they jewelry companies? What did Puerto Rico have?
I'm not overly familiar with what there's, you know, I mean, I know obviously their tourism and some of their other industries.
No, they had Puerto Rico had industries.
I mean,
They
and
had
companies
all
order-
kind of
I know that,
manufacturing industries.
oh yeah, and, I mean, they do a lot of big, well, they make a lot of alcohol in Puerto Rico.
Maybe it was the alcohol. No, pharmaceutical. It was the pharmaceutical. They were making all the US drugs pharmaceutically.
Okay.
And they had all the factories, and he said they pulled the plug on the pharmaceuticals, and their revenue just cut off.
Yeah.
Where they thought, you know, companies like, companies that were making, all these drugs would stay if they changed their policies around it. And sure enough, they left.
Mhm.
And they all moved their headquarters overseas. Puerto Rico lost all the tax revenue, and he said everything just, and they wouldn't make the cuts to the social services.
I mean, it's unfortunate, but it's not unexpected because we've seen it happen in other places. Again, the only way there's gonna be a fix to what's going on in Puerto Rico is with a massive amount of capital investment. And people aren't likely going to be willing to make that type of capital investment without having a guarantee that Puerto Rico is more secure and that they have statehood. Never mind the fact that I believe they're in favor of becoming a US state anyway.
Yeah, so Fritz, we have a question. We actually have our first question.
We have our first
We have
question.
our first
Okay,
question.
we're actually out of time, so we'll answer this question and then we're gonna wrap it up.
Lennar wants to know, hey Lennar, thank you so much for joining. This is our third episode, so, our first question, so we're excited, so
All right.
Leo, thank you much. So we'll let Fritz and we'll both do this, so.
Okay. What's the
Can
question?
you comment how technology will disrupt the home valuation process? All right, so this is a good one. I'll go.
I'll let you
we'll
go.
We'll go first. All right. So technology is disrupting the home market. So technology is already disrupting the home valuation process, but it's one of those things to where how that looks long term to me is going to be beneficial not only to the appraiser, the real estate agent, and the lender, the consumer, and everyone else involved, just based on access, right? So right now, when you need an appraisal done, it's only for lending purposes, right? The county assessor, everyone does it just for lending purposes. You don't get an appraisal done every year annually for your taxes, right? Or you don't get an appraisal done to argue your tax appeal or pre-listing on a house. Why? Because number one, it's too expensive, and it's too time consuming, right? Now, you think time consuming is something where, the appraiser has to go out. So all that'll still happen. But what I think is gonna happen in a big way is there'll be more products available, right? So you won't just have your full appraisal. You'll have alternative valuations that'll go into pre-listing prices. You'll have desktop versions of the appraisal, and then you'll have the automated ones. But the automated ones, to me, are going to be supplemented with the appraiser's oversight. And the reason I think that is because right now the AVMs are cute, and they're AVMs because they're gonna be automated and stuff like that. But that's just because there's no alternative, right? So if you have a choice between paying $600 or $10, you're gonna go with 10 knowing it's a little off. But if you had an option that was 100 to 150, well, you would almost go with that on every one. And people like accountants and attorneys and homeowners and real estate agents and all these other ones, all these other people who would be using appraisers and appraisal services for what they do, end up not because the price point's too high. So, and then like things like home equity lines of credit. There's so many lenders that take risks on home equity lines of credit because they're only gonna make, let's say, on a $10,000 loan, they charge a $100 origination fee in 1 point. So that means they're $200 all in. So if they're paying $600 for the appraisal, well, they're gonna lose money on this thing for the first 3 years. So then what they end up doing, either not doing a loan, or not doing the appraisal.
Or offsetting with a higher rate.
Or offsetting with a higher rate, right? But even then, I mean, you're talking a low $10,000 loan.
Right.
And now, I mean, if you had a $150 appraisal desktop, you do it all day. $100 appraisal desktop, you do it all day. And personally, I think, it's like the more accurate. So let's look at the stock market. The stock market's so active because of the accuracy in valuations, right? And even though the stock market is relatively inefficient when it comes to, let's say, the political aspects of valuations associated with stocks, like Bitcoin, right, where it's hyperinflated. Generally speaking, in real time how things are going, right? Like if a stock's going up or going down in real time or going online. With real estate, you don't know that.
No.
You don't know the home prices in your market going up or going down. You don't necessarily know what'll happen if you do this or what'll happen to that. Basically, when I was an appraiser, and I'm still have my license, when you go out and tell a homeowner what their homeowner's worth, a house is worth, a lot of times it's a surprise to everybody. And now I think appraisers, with an alternative valuation that use the technology, will have the ability to say, hey, for $10 a month, I will update your appraisal and I'll do the whole community. For, getting an annual appraisal done on your house will become more of a common thing for tax purposes, for planning purposes, for net worth purposes, because it's only $100 or $150 as opposed to it being $600 for mortgage lending purposes.
Right.
And appraisers, I think, have to be kind of open, and people have to be open to the idea of a new way of doing it for more access.
Well, and that's perfect because
It's like the newspapers.
yeah,
Go online, lower the price, go for volume.
right. Well, so here's the thing. This actually goes perfectly into really the first part of the discussion we were having about changes to the appraisal forms.
Yeah.
Okay, this is a good example of why those changes are needed to those appraisal forms. Because now what you can do is, instead of just having the appraisal done for lending, for collateral valuation for lending, you can have that done for any number of intended uses, okay? And you can say, well, if the intended use is this, then do these things, right? So that you're actually able to customize and create these types of additional products that you're talking about based on those changes made to the form. So I think that's really a direction that it's going, because the other part of this is, it's actually to the benefit of the housing industry and to lenders and to builders if people are having an annual appraisal done on their home, say for example for tax purposes,
Yeah.
or just because, hey, I wanna pay $100 and find out where I'm at, where I'm at in my, as far as my home value goes, maybe compared to my neighbor, what have you. Okay, because what you end up doing is you create a more accurate, picture of what these homes and what these neighborhoods are really worth.
Yeah.
Okay, and you create additional opportunities for appraisers, because reality is, if lending is not going on, appraisers go out of business because they don't have.
And lenders,
Okay.
and from that perspective, and Leo, I think you're really onto something here with your question, is lenders wanna know what their homes are worth.
Absolutely.
Because ultimately, if
They're
there's
servicing a
collateral-
portfolio,
yeah,
right, of collateral, right.
Yeah, that they can lend on.
Yeah,
They wanna know.
right.
And so all of those things
Well, yeah,
combined-
because you think about it, okay, so, right, because then what you do, okay, you're at the bank, hey, look, Tom, or whatever, here's 15, folks that we hold servicing on for their loans. We've got their we just had evaluations done, automated models, whatever it is, or, maybe a lower value, lower type appraisal or whatever, maybe it's not a full 1004 collateral evaluation, but it's somewhat close or whatever, but it gives a more accurate version of what that property's worth than doing just like an ABM. Oh, hey, look, of these 15 folks, these 10 people would really, we could give them HELOCs at an extremely low rate because they've got all this equity, and, call them and see if you can get them interested in that, because, oh, by the way, look, this guy's got a huge credit card balance with us, it's 28%. Call them and tell them,
Yeah.
let's flip this into a HELOC and put it at, 5%, 7%. So now you're giving better service to your borrowers, okay, to your banking clients, right? Based on the fact that you don't have this huge barrier to evaluate their collateral.
Yep,
Okay,
exactly.
so I think that, again, the changes to the form go into this, these things play hand in hand, and what it does is it really creates, frankly, a pretty good look of, it's a good look, it's a good thing. It means that there's gonna be a lot more options, a lot more flexibility in the lending environment, okay, and a lot more lending going on, because it's gonna be easier for those banks to free up that capital or use that capital, because they have it, it's available to them, they have the capital to lend, they're just not lending it as much. Part of that is they say they're overregulated, maybe some of that's true, but if they have these alternate products where they can do alternate valuations, again, they can really start tailoring their business model to really service their borrowers in a better way, and to keep the velocity of interest and the velocity of of equity going in the appraisal business, in the housing market.
Yeah, absolutely, absolutely. And so wrapping up, so thanks for the question. First question, high five.
Yeah.
All right,
All right.
we got one.
Good.
Let's talk about next week. So we got Barry.
Yeah, Barry's
aboard.
coming on next week.
And this is something that, and Leo, thank you for the insight. Yeah, absolutely, no problem, anytime. We got Barry Beebe coming aboard, and he's gonna help everyone plan their 2018, I think, right? Like, we're gonna get into it.
Yeah.
And we're gonna really get into it. So the idea guys behind this show, when Fritz and I thought about it, is not only to provide our, I would say very educated, astute, valued, opinions on things, but also to give access to other people who have insight, value, and opinions on things. So we're gonna be in some guests. We got Rod Alba from the American Bankers Association. Rod, we're looking forward to having you on.